Hey, welcome everyone. It's Rob. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please type the number one in the chat box, let me know that you can. I would truly appreciate it. Thank you, thank you, thank you, thank you, thank you all so very much. All right. Zoom gave me a little bit of a hard time getting in today, so I'm just a few seconds behind where I want to be. Perfect. Hey, afternoon, Kevin. Hey, Brenda. Good afternoon. Morning, Jim. Thanks, Andrew. Morning, Helen. Yep, got it, Andrew. Thank you for that. All right. Well, I hope everybody's having a great day. It's been a good one in the market so far. I'm liking what I see. Let me just shut volume off over here on my other computer. I just hear it rocking away there. Somebody's on Slack going nutso right now. All right, there we go. So as we get started, keep in mind everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance. All right, today's agenda, we're going to go through our follow us page. We'll look at trades from today, so get your trades ready. Economic reports, we'll look at the market as a review, upcoming trainings, weekly training topic, and your stocks review. Basically, to me, two of the most important sections in here is number 2 and number 7. Today's trades. What trades did you do? Good, bad, or indifferent. I don't really care. But what trades did you do? They don't have to be today. They could have been from Friday or Thursday. It could be something that's still open right now. That's fine. Funded or non-funded is a non-issue because we don't care if they're funded or non-funded. My hope is all of you are trading non-funded as a starting place for sure. And then your stocks review is at the very end, with whatever time we have left. It's to go over and look at candidates that you guys would like me to take a view at. Just check out the chart and give you some insight of what I see. So here's our follow us page. You can go to all of these locations with the exception of the trading post. You've got to click on the link, which Andrew will drop in for you. It is our newsletter that we send out every single trading day. Markets open, we are open. The newsletter goes out. Comes out to you in the morning before the market gets started. It gives you a handful of ideas each day. Depends the theme of the day. Every day is slightly different. Depends on the theme, but gives you a handful of ideas as potential trading candidates for that day. And it's free, as all of our socials are. All right, today's trade. So, what candidates, what companies did you trade? Brenda typed in 3.62% on SPY this morning. Good job, Brenda. Jeff said, did 4 micro NQ trades, 5 contracts each. The shortest was 2 seconds. And then Jeff is really stretching it out for his longest trade is 6 seconds. Ah, talk about scalping, baby. I love it. I love it. Oh, I'm sorry. I thought it said seconds. My bad. 6 minutes and 43 seconds. My bad. Okay. I just found that to be awesome, Jeff. If you did 2 and 6 second trades and that was your whole day. 6 minutes, 43 seconds, made $217.18. Best trade, 3 seconds, $102.50. All profitable done in the first hour. Nice. Very nice. Trips had 2 scalps this morning. Nvidia for 27.3% in 7 minutes. Apple for 35.7% in 5 minutes. And there you go, guys. I mean, that's as hard and as simple as it is. It's just getting in, getting out. Notice a lot of what you're seeing. These are people that are out of the trades. Brenda, Jeff, Tripp, they're already out of those trades today. And I think that's a main focal consideration right now is how long are you hanging on to these trades? How long are you actually in them, in the positions? I gotta grab some water, guys. Hold on. Brought it in, just didn't put it on the desk. So let's take a look. Oh, here we go. Jim typed in Friday SPXW. X, which is the dailies, bought a call at 9:34 a.m. Eastern, held until 2:18 p.m. 62% return. Nice. Today, same position, bought calls at 10:30, still in them, up 125%. Now, I'm trading SPX or SPY actually right now, Jim. So I'm with you, brother. That is awesome. Yep, there you go. Brendan said, congrats to everybody. That's awesome. Great. We go into Omega charts. AMD was the very first one. So, guys, we've got a very bearish looking pattern on AMD, but a very bullish looking day on the SPX, right? So based on that, I decided to take some bullish trades today that are only going to be meant for intraday trades. I will not hold any of these overnight. Do not pass go. Do not collect $200. That I am in and out same day, no ifs, ands, or buts. I did do them all as one contract trades because they are all of them that are in a bearish position like AMD. It's a bearish bias, but it had opened up, slight gap down, stretched down to the fib line and bounced. The key is all a matter of what's the bounce look like. It's not just because it pulled back. Coinbase was one that I didn't do today. I forgot there was one other one. Might have been Dash. That the breakout and setup just wasn't there. Yeah, it was a great view on a daily chart, but once you break down to the smaller time frames, it's just not available. It's not there. Um, Greg, comments are in the chat box. You're welcome to open up chat and drop in. I read every comment that gets dropped in there. So AMD, let's go and break it down. We'll start with a 5-minute chart, right? Okay, 5 gives us nothing. Gap down, run into the fib line and a bounce. That tells us if this happened within the first 5 or 10 minutes of the day is when this trade would have been entered. So let's go look at a 1-minute chart. Let's go look at a 1-minute chart. There we go. All right. So what happened? We gapped and we closed right at the fib line, which is 205.62. We closed right there. We moved up and broke out on the next candle. I could probably get us in a little bit more scaled in on this candle. Third one of the day, third minute of the day. And then candle number 4, we stretched all the way back to the fib line, and we bounced. That's the setup, right? What do we want to see? We had broken down, closed right there. And again, I'm not drawing it in the exact place, right? So if I go back and try to be more precise, we gap down from here, right, from the open, from the close of Friday. We gap down. Here's our open. We closed right there. We stretched a little bit further down, and then we broke out nicely. We stretched back and bounced, and on the bounce is where the trade is taken. Stop is going to be somewhere down below support. Target is going to be our next fib line. I do have multiple ways that I target exits, but right, this was a great setup, a great bounce on AMD today. Just a great looking bounce in there today. 218.80 is resistance. And I did not check if we got filled on any of these on exit, so I don't know where we're at, but we've got a high today of 216.77. Yeah, probably not, because I'd be at 217.80. 216.77. Yeah, no, it's 17.77. Trip said AMD refuses to close that window. Yeah, and I'm hoping it closes enough up to get me into resistance, Trip. If I can get that today, I'd be happy. Very tickle pink, actually. AMD trade, Jeff. Jim said earnings were last week on 2-3. Was that another consideration of your bullish trade? No, it wasn't. It was all a matter of the market itself pushing higher, gap down on the S&P, nice move up. We'll look at S&P in a few minutes, but and you know what I'm talking about, Jim. Nice move up from there, and then this becomes a clear and concise. Boy, I haven't used that enough lately. A clear and concise entry inside of that zone right there. What does that mean, clear and concise? Clear, meaning I have a clear path to my resistance. Concise, meaning getting in at the right place. We go back into the 1-minute chart, and that's the concise entry. We closed that support. We broke out. So there's the break, the retest, and the bounce. We didn't close the gap by the time we took the trade, but obviously we had closed that gap from Friday, which was small, but we had closed that up. So the earnings are just what drove it there. Were or are the earnings an overreaction? Don't know. Don't care. Was today's move pure sympathy is the wrong word, but I don't have a better way of saying it. It's a sympathy trade when the whole market goes down, your stock has great news. Instead of going up, it goes down too, right? So is it moving in the direction of the market just for the sake of? That's why I did one contract, and that's why I'll be out of it today. You're talking about the October window, Trip said. Okay. So I just show my from right in here. Oh, this down to the downside. Yeah, and I'm okay with it not filling that. I'd rather it not, at least not right now. At least not today. How about that? Jim said AMD look left button, look left bottom has been here before as well. Absolutely. Yep. Right in here. And I don't know if we go further back. No, we'd have to go too far back, but maybe. But it's definitely there with these two candles. that came in, this blue zone that held well right in there, which was that may be from a previous fib, that blue zone, maybe in there. Um, okay, so AMD, great. Reddit, haven't traded it much. It's a brand new candidate for us on Pop. We got a little bit of a bounce today, so let's go look. Here's the process. If you're doing this live as it's happening, when I was looking at this earlier today, what am I looking at? Here is a blank screen, and I'm gonna break this down into four quadrants. Quad, right? How about six quadrants right now? Four quadrants, right? This is a 1 minute chart. This is 5 minute chart. This is a 30-minute chart, and this is a daily chart. Okay. So they're all set up on one screen all at once, TradeStation, TOS, whomever you're using. Most brokers allow you to do this with their software, right? You've got to decide what your four time frames are going to be, and then you've got to decide what your primary is. My primary is my 5 minute. That's my primary time frame. In other words, the analysis came, and I can't show it to you again because I'd lose all of what I just drew, but the analysis came off of the daily chart from last night of where we closed on AMD. Okay, from there, I'm going to be watching what the 5 minute does. I'm going to look at the 1 minute to help tweak the entry. And then the 30 and the daily would be, if anything, for confirmation of trend, right? Of giving me that. Now, we gapped down, a bearish candidate, but we're moving up. But so I'm going to have to take it off now to bring us back into the chart. But what's going on there, guys? We're looking for that bounce to take place. I've got a clear path to resistance. Do I have a concise entry? Let's go look at a 5 minute candle and see. So on a 5 minute candle, I'll bring this one in a little bit. Fib line is 138.10, we'll call it. We closed at 138.50, we'll call it, right? So 145 actually, but 35 cents away is where we closed. We stretched down, we hit it, and we bounced. Inside of there, I'm tweaking with the one, watching the entry. And now what? Now I wait for the move. And once we get up on this scenario, I think we were 50 cents off. I think we were at 138.60, about is where we took the entry, right? 138.70, somewhere in there. So, I mean, just tight, right? So on a $150 stock, it's the rules of Pop. The Pop engagement is what it is. So we took the trade there. Now we've got a little bit of a pullback. If we're still in the trade, did we contend with some of that? Did you do a micro day trading exit where you're out within the first 15 or 20 minutes? All of that is, compliant here and potential, right? But Reddit RDDT is a brand new stock for us. Once again, one contract. Why? Because we've got an overall bullish market and a bearish setup on Reddit. But I've got the clear path to resistance and a concise entry. As long as I have that and I'm willing to reduce my risk, how? Reduce it by doing less contracts, reduce it by doing different companies. Meaning don't go after Costco, don't go after Eli Lilly. Don't go after Booking at $5,000 or whatever the price is today. Don't go after those big stocks. Go after a Home Depot. Go after an Apple. Go after a DoorDash or Ford, a much lower price stock, but you can adjust by the stock range that you use, the individual stock you use, the price of it, price of options, all of that. And you can adjust by the number of contracts you trade. You can also make adjustments based on implied volatility. I'm looking at overall market was bullish. A handful of stocks were like this that had bearish patterns that were bouncing today. It needs a clear and concise entry. If the stars all align, if everything sets up and I can get the bounce off there, I'm only going to take a risk with one contract, right? So I want to participate. I just don't want to participate at a full level of risk that I'm normally accustomed to. And to make that easy, for me, a normal trade on something like a Reddit, $140 stock, 10 contracts, a couple grand, not a problem, right? If it was an aggressive entry that I'm just taking, just a standard aggressive entry, where let's say it's a bullish bias, but it does not, it's a rank of 2, so I don't really have the moving averages in play, and I'm going to take that trade. I'll take that at 4 contracts, right? At a lower number. That's an aggressive entry. This would be more of a super aggressive entry we're going against the grain of what the market is doing. The market's bullish and we've got a bearish candidate. I want to partake, but I don't want to put 10 contracts or even 4 at risk, so I'll do one. Right? So if I'm wrong and there's $700 or $800 of risk in this trade, so be it. I'm not going to go out of business because of the one trade. But it is nothing more than having your risk management rules down pat. And I can't stress enough the importance of having those things done. Right? My team and I right now, and this is very early conversations, okay? My team and I right now are in the process of working through a scenario of how I might do things differently with one of our programs. Not going to mention which one it is, but with one of our programs on how my strategy creation system, how we can make things slightly different, how we can add value in there that gives every trader a better opportunity of success, of potential success from that setup, from that scenario, right? And some of the stuff we've come up with is killer. I know y'all are going to love it when you see it, but right now, again, very early stages. But why, guys? Because I look at it from a different standpoint. Most of you are sitting in your little cubbies at home or office or wherever you are, car, park, wherever you're trading from, beach, Taiwan, wherever you are, it doesn't matter, right? You're sitting there and you're looking at it from the perspective of you. I am trying to do this for me. This is what I do and how I want to do it and my risk and I have to look at this from the standpoint of there's tens of thousands of students at Wealth Builders. How do I effectively disseminate information that each one of them can take something from it to help build their strategy from, to help build their systematic approach from? And that is just bottom line of what we do. That makes the difference of a good trader versus a great trader. A good trader can get some stuff on their side and get it figured out and so forth. And I got a buddy of mine that once he has a system down, man, he's a friggin' machine. He is just on it. Boom, 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 boom. Day one, when the machine breaks, the market, let's say it has been going up and the market drops. Day one, the machine breaks. He can't trade worth a lick because he's in repeat mode. Just rinse and repeat over and over and over again. Right? It's no different than, if you look at a Kirby vacuum cleaner salesman, right? If y'all know what those are, right? Or a door-to-door salesman. I don't know if they still have them anymore, but I did that a long time ago. And, knocking on that door and taking that slam in the face over and over again, many people, and the guy said it. The first day I was in that room, the sales manager said, I can tell you right now, he goes, everyone look, count how many people are in the seats right now. He said, program's closed. We're not adding anybody else new right now. He said, tomorrow, half of you will not come back. And someone asked why. He said, because the door is going to slam in your face too many times and you're going to give up. And for some of you, you're in that place right now when it comes to the market. The door is slammed in your face too many times or one too many times and you're ready to give up, right? How do other people become successful at selling Kirby vacuum cleaners, right? You get more no's. The bottom line is this. It's going to take a certain number of trades going against you every time you do trades. And what I mean by that is out of 100 trades, maybe 30, 40, 50 of them, 60 of them go against you. And then, if 60 go against you, 40 winners. Yeah, but can I make any money with 60 winners, with only 40 winners? Well, if I have a 2-to-1 reward to risk ratio, if I have 4 winners, each one is worth $2. That's $2 times 4 winning trades is $8. Now the other 6 went against me. They were, L does not stand for losers. It stands for learning or lessons. Okay. They were 6 lessons. Each one of those cost me $1. Times 6 of those trades, I'm down $6 on that. But bottom line is I am plus 2 for the entire 10 trades. And you're talking about being wrong 60% of the time. And every once in a while, you're going to screw up and you're not going to get $2. You're going to get 9. Every once in a while, it's just going to happen. Right? It was me as a kid when my dad told me to slow down bowling. I was throwing the ball way too fast. I was 16 years old bowling with a 16-pound ball, threw that sucker down the alley so fast that there was no pin action. Everything just pushed straight back. When my father asked, "What are you trying to do? When you get up to the line, what are you trying to do?" I said, "Get a strike." He goes, "I never want you to try to get a strike again." Now I'm 16 and excuse my French, I'm an absolute ass at 16. Okay. I said, "Okay, Dad, what do you want me to do?" He said, "I want you to get 9." Okay, you want me to get a 9. Why would you want me to get a 9? He said, "If you get a 9, more than likely you're leaving one of the 2 corner pins." He said, "Can you pick up that corner pin if it's up there, either the 7 or the 10?" I said, "Yeah, 8 out of 10, 9 out of 10 times I'll get that pin." He said, "You realize if you bowl a 9 and a spare, you got a 190 game." He said, "What's your average right now?" It was like 160. He said, "So if you just stop trying to get strikes and go for the spare, get a really good getting on base, and pick it up, you'll do better than you are right now. And every once in a while, you'll screw up and you'll get a strike." And he's right. Every once in a while, you're going to screw your trade up and you're going to do better than the $2. Okay, yeah, but what if it screws up and gets worse than the $1? It can happen, but don't allow it. Put your stops in place, set it up. And if you're holding overnight, you run more of that risk. Right now, I don't hold overnight. So I don't run into that risk. Rare, could something happen during the day? Yes, but how often is an intraday announcement come out that we weren't aware of, like the Fed? We know that. And the market just drops 100 points from it closed here at 6,000 and now it's at 5,900. No, it doesn't do that intraday, right? Unknown news. Yes, it can, right? A Fed announcement and so forth could cause that. Earnings, if it was happening during the market, it could happen. Overnight trades could happen. If you're day trading, the likelihood is very slim. Doesn't mean you can't lose more than the $1, right? That's our standard risk of what we're doing, okay, or what we're looking at. Roman said, "Every no getting you closer to a yes. I used to sell rainbow vacuum cleaners." There you go. Roman, like-minded people, right? I mean, listen, whatever it takes in life to be successful, folks, that's all I care about. Whatever it freaking takes in life. Jim said, "Reddit, yes, bearish pattern, but it's been down 10 straight days. After Friday's big bear candle, a reset candle, bullish, could happen today, especially bouncing up off the fib line like it is doing." Exactly. And Jim, could I have been wrong? Yes. Was I willing to risk the 60, 70, 80 cents, a dollar to the downside? Without a doubt. Yes. Without a doubt I was. Right? And if I'm wrong, I'm wrong. And that's okay. I will have trades go against me. There is no question. Folks, if we look, I can't really. Well, all right. So I don't have anything broken down yet here, but this is our trades for this year in power option plays. Okay, just look here. Right, we got 1, 2, 3, 4, 5, 6. This is number 6. Seven trades have gone against us. We've got 45 plus 4. That's 49 lines. The first 4 lines are headers. So there's 45 trades and we had 6. 1, 2, 3, 4. 1, 2, 3, 4, 5, 6, 7. We had 7 go against us. 7 out of 45. Right? So what is that? Do I have a print button on this screen? Where is it? Where's my printer? Ah, I just changed my keyboard and there's no printer on this one. All right. So can we get one? Not printer, sorry, calculator. All right. So what did I say? 45 trades. So 7 divided by 45. So 15% of our trades have gone against us. We're sitting at about an 84% win rate right now for this year. January into February is always good for us. We always do extremely well at the beginning of the year, every year. This year was exceptional. And these are all 1 contract trades that we're looking at here. None of these are on the 10 and 4 contract side. I know what it says here, but just look at the stop out quantity. They're all 1s. Right? And when you look, did we have some really good numbers in there? Well, let's look at the ones that went against us. We're down $343. We're down $370. We're down $27. We're down $320. We're down $312. We're down $80.90. You notice the theme? 300, 300, 300, 300. Right? 200, 100, 25. Right? Did we have some good ones on the other side? 700 plus, 1,000, 200. Oh, how did I do that? Okay. 300, 270, 600, 800. Did we have a 9,000 on booking? Yes. That was a 1 contract trade. All right. It was a 1 contract trade. We would only do 4 in a regular trade on that. which was, $37,000 on booking this year for our other account. Okay. And again, we consider everything a non-funded trade. But you've got to have your numbers down. And if I know that these trade setups give me an 85% win rate, then when I place a trade, I know that there's no way in the God's great earth I'm not going to lose on 16 out of 100 of my trades are going to go against me. Could they be 16 in a row? Yes. Suck it up, Buttercup. It's happening. It is what it is. There's nothing we can do to get around that. I don't get to pick when the 16 trades happen. Could things get really bad and the market just starts flailing all over the place? It's up 50 points in the morning and down 100 points in the afternoon? Yes, and those cause other issues, which is where micro day trading comes in. Guys, understand, if you take my journey as the starting point, my journey as a trader was a swing trader. I looked at day traders going, "Tee, you spit on them. They're garbage. I want nothing to do with those people." Now, understand, day trading today is a lot different than it was when I first started. Day trading was a momentum trade that you're trying to pick up 1/16th, right? You're trying to pick up, or 12 and a half cents, 1/8. You're trying to pick up 12 and a half cents on a move. Why are you trading Microsoft today? It moved. Off of what? It didn't matter. It was here and now it's here. We took a trade. It was a momentum trade. I didn't take those trades. I couldn't stand those trades. I didn't want to be in front of the computer. I did not want to become a slave to the trade. And what happened? Over time, I got more accustomed to day trading through power option plays, which is the last 10 plus years. I'm running power option plays. We've had day trades as part of it, but the script got flipped with day versus swing trade when COVID hit. Volatility went off the charts from there. And now I am very little on swing trades and almost all in on day trades. And the reason for it is exactly this. If we look at the S&P again, right? These wicked moves where we get up and break out of that swing high, which was not the highest one, but we broke out here the previous day's high, and then big smashing candle down, big candle down, gap and go to the downside. Those right there destroy all your profits when you're in swing trades because you can't control it. You've got a candle that you closed here, and you're like, all right, I really just want to get back above the blue line. If it does, I'll get out of the trade, and then it gaps down. And you had an option that when you entered, it cost you $9, and now it's worth $1.50. And actually, as you're sitting there watching it and the market drops, the $1.50 goes down to 80 cents in seconds, right? And you're wiped out at that point. And I've seen it happen enough that my nature is, how do I build that better mousetrap? And hopefully we all strive for something like that in whatever's important to us in life, whether it's your job, your hobby, what you do with your kids, whatever it is, right? For me, my kids when they were growing up, they got business rammed down their throats. Everything, every idea they brought up. Oh yeah, Dad, I went to the dollar store and they had a bag of candy and I bought it because the candy is $1 each in the store. And I bought a bag of it, and there were 5 of them in there, and I spent $1, and I was able to sell the other 4 bars to my friends for $1, and I made $4 on it. And next thing you know, my daughter is a candy manufacturer. I got her in Charlie's chocolate factory. She's running a big show, worldwide distribution. We've got networks in every major continent of the world. And it's like, Dad, I just want to buy some candy and make a little bit extra money. I don't want to do that. But for me, it's how do I make it better? It's no different when it comes to the trade. Micro day trading came in as a necessity that I don't want to get my head handed to me. If I get a momentous move, like on a Reddit, let me find the 5. All right. Right here, big move up. Man, I know when we get that fast acting move and we start to roll over, it's done. There's 4 different patterns I look for. And at that point, you scale out of the trade because guess what? When that stock was here on the way down, momentum had already flipped. The implied volatility was already increasing. The bid-ask spread was opening up. They were sucking premium out of the call options because the volatility was being pushed into the puts. And even when the stock get back to the same price, if that option was worth, I'll make a number up, $7 here, at the same price right here, the option's worth 4.5 or 5 because all of that took the gusto away. So I'd rather get out there. Yeah, I might be shooting for up here, but when I get a certain move, the pattern says get out. It's time to get out. Don't fight it. It's time to go. Bigger, better deal. Exactly, Trip. Bigger, better deal. What is that there? Oh, okay. Andrew dropped something in there, guys. If you want to check out Power Option, please. I know someone had asked about it, so he dropped that in for you guys. All right, and then SPY was my last one. SPY, magnifique, beautiful, mwah, I love it. Let's go ahead and get rid of today. Let's take today's candle off the chart. We closed in a bullish bias rank of 1. What does that mean? Attack. Attack. Now, we are in an inverted relationship of the 8 and 21, so it's not a true bullish bias. It's bullish, but it's not true bull. So what do? I'm still taking a bullish trade. So what if it breaks out, Rob? We're going to take the breakout? Well, we didn't break out today. We pulled back. The answer is no, we're not taking a breakout. We need a pullback and a bounce. So if it broke out, that's fine. Pull back, bounce, and now I'll take the trade. Breakouts fail. Look at them. You broke out, we failed. We broke out. Oh, but see, that won't work, Rob. Okay, you got one, right? It broke out, failed, 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 failed. Broke out, failed, fail, fail, right? But it broke out here, Robin. It worked. Okay, guys, it's not in everything, but if you look at probabilities, you got 1 or 2 that work and 6 or 8 that don't, right? I'd rather go with what has the higher probability of working. So today, what happened? We opened up right at the fib line. We stretched down and bounced. Did we get a pattern that gave me a move up, a retest, and a bounce? Let's go look at a 5-minute candle. So we got down, we closed here, we did pull back and bounce. Let's bring it into a 1. I gotta move another bit. Okay. So here was the move down. Here was our close right there. We had a fib line of 689.25, we'll call it. And we closed on this third candle of the morning. Just trying to get my hand off the mouse because I'm moving it. We closed at 689.52. From 25 to 52, we got about 27 cents in there. All right. And then what happened? We moved up and we stretched back. And my low, my pullback, came into 689.39. So we're at a line of 25. We pulled back to 39. Let's call it 40. We're 15 cents away and we bounced. Right. Next candle, we moved up enough. The entry of the trade was taken. And look what's happened, guys. We rock and rolled. You're in this trade at 689, 690 and a quarter. And here we're looking at resistance at 694 and a half, call it quarter, 694 and a quarter, 693, 680. So we had $3, about a $3 move on that. There's about $3 on the SPY today. So one contract. Well, actually, no, SPY was good, but this was a 4 contract trade. It was aggressive. The setup wasn't right, wasn't there fully, because I did not have my moving averages in the right order before the day started. They are now, but you can't count that. That happened because of today's move. The 8 was below the 21, but we had a bullish bias with a rank of 1. So the trade has taken 4 contracts there, plenty of opportunity, and I feel like I'm teaching for 2 hours already with as excited as I am about this type of stuff. But if you just step back and analyze everything that I just laid out for you, every bit of this, take all of that to heart and figure out in your system, what are you doing differently than I am? If you're in power option plays, dig in on the dang rules. Go back and watch the core trainings that I did for that material, for that program. That's what all the day trading rules are. And it's the same if you're in mastermind. You got to watch the videos on the training rules. That's the only way you're going to get any good at this, is learning the steps for each of these trades. We've got some new and improved things that we're doing for them to help make it easier. What do you mean by that, Tom? What is the certain move? If you're asking what was I looking for, we opened here. That certain move is I need to move up. I needed to close near this line within $1, within 80 cents. You pick what that is. I need to close in there, and then I need to bounce and needs to move away X, $1, $1.50, whatever it is. It needs to move away, and that's where the trade is taken. My resistance is here. My target is here. My stop is down here. My micro day trading exit is intraday based on 4 different patterns. And if none of that is hit, my 3:45 p.m. timed exit comes into play. And this is Eastern. If I'm not hit by 3:45 on any of my exits, everything gets canceled. 3:45 p.m. we exit out of the trade, done. Whatever the market order. Oh, but you get ripped off at market. You're going to get ripped off a lot more if you hold overnight and you get a gap to the downside tomorrow. All right. So especially since I'm trading as shorter term options as I possibly can, which are today's. Right? Why would I pay for time value for another day or week if I don't have to? All right. So we had some great setups today out there, right? Hopefully you were able to take advantage of them. And what do? We followed the rules. But Rob, I can't watch all these stocks at once. And that's where using software comes in handy, where you're setting up multiple screens, having 6 monitors helps, where I can lay out my TradeStation template on each screen and have one stock in each one that I'm watching. That's key for me. And especially when the trade is open, that's key for me. And then I can make decisions based on what I see on those charts. One of those screens is normally not one that's active in one stock. It's one that I'm rolling through other stocks that I'm considering. I don't have enough to put more. Like Robert K, I think he set up 8 monitors. When I built my system with 6, he built his with 8. So he's got 2 extra monitors. And I thought about doing that and putting them here, but they cover most of the window. And my wife is nay when it comes to that. She did okay me putting a 40-inch TV up on the wall up there, but then I got to sit like this to watch it. So that's a little bit too much. Okay, Tom, it made sense? Good. Okay. Because if not, tell me and I'll be glad to explain what it is there. What alerts do you set up on each of the 6 screens? So on TradeStation, I'm watching all 6 of them, right? I'll set an alert up based on a moving average price for a pullback. And that's just it. I need to see it come back to a price. So whatever we closed at last night, I may be setting an alert up here today based on 690, right? It is my alert if it hits 690. Now that may hit it on the upside, it may hit it on the downside, but realistically, my alerts are set based on Costco, bad choice. Okay, so I may set an alert up on, forget about today. If we take the last candle off of the screen, if I thought today was going to be a bearish day, right? I may set an alert on this up for whatever this fib line is just above that fib line. I'll set an alert up to tell me what that is, to trigger that for me, Tom. So this way, now I know what's going on in the market without having to be looking at that stock. TradeStation is a pain when it comes, at least 9.5, when it comes to alerts. They're horrible at setups there. Let's see. Trying to find one that would give me a good alert scenario for us. Okay, so on this, who is this here? Meta. On Meta, my alert on this one, Tom, might be expecting a bearish day. That as we get up near this fib line, whatever that is, let's see, let's try to get the number there. So we're at 670. So maybe at 669, 668, I'm going to have an alarm set there. Why? An alert. Because if it moves up to that price, I want to look at the chart. I'll make a decision very quickly when I get there. I'll make a decision based on that. But other than that, I am. Oh, this is Thursdays for Friday. Fridays is in my closet. We have a cleaning company that comes through once a week, and I have to empty everything off my desk, or I get in trouble because they won't clean it, and my wife gets very angry. But this tracking sheet from Pop, I do this every day. Every day. And if I've got a rank of 1 on any of my stocks, those are the ones that go on individual screens. Twos are my next ones to look at. And then in pre-market, I check them out. And if any of those are setting up as potentials, they go onto an individual screen. All the ones that are 3, you may get big moves, and we get what would be the equivalent of a very fast mover on a gap, let's say, or something that moves to a level and breaks out, pulls back, and there may be potential opportunities there. I might set some of those up, but I'm focused on my 1s and my 2s that are right coming out of power option plays. This right here, right? Omega charts. I chose the name Omega charts when we named it, right? Omega charts, and what we say is Omega, right? It's the first and the last. It's the first charting program you will ever need. It'll work for you as a brand new trader, and it's the last one you'll ever need. You will not need to upgrade to a different charting program ever, right? And that's the way that I feel about Pop. Power option plays is the first and only trading system you will ever need. If you can just learn this system down, it's the first and last one you'll ever need to get your hands on to work through. That's it. And it doesn't, guys, it doesn't have to be Pop. I don't care if you join Pop or not. It's nothing to do with this. It has everything to do with you've got to come up with what works for you. This is what works for me. All right? In my little world, this works for me. So long way to get around what our trades were today, but I thought it was that section okay? Did we do all right there? You know, spent a lot of time on it. Was that okay? A lot of detail went into that one, but just give me a 1 for yes, a 2 for no. And Andrew, I'm gonna give you a 2. Just hit eject and no, I'm kidding. Good, thanks. Okay. Hey Andres, how you doing? All right, good. Economic reports. Let's go check it out. Go to Forex Factory, click more. Everything is 8:30 reports this week, so they're all a number 2 for me as far as I'm concerned. It is pre-market. They're big reports. Some are ones the Fed will focus on, some of them they will not. But they're all big reports. If you're not trading futures at 8:30 in the morning or you're not carrying positions overnight, it doesn't matter. The announcement will react at the 9:30 open on our numbers. So not really much out there for this week. Market review. All right, let's go back to the S&P. So much has happened, right? We had this break to the downside. We had a lower swing low and a lower one and a lower one and a low. Now, it wasn't a swing low. It was a lower low, lower low. This was a swing low. What is a swing low? You get a low, the next day is a lower low, and the day after is a higher low. That's what gives you a swing low. We took out this previous one. So we took out this one and this one with this low. Okay. So this move up right now, we must, not should, not hopeful, we must take out the all-time high. We have to. If we do not take out the all-time high, this overall move is at jeopardy of failing. Now, we've had 2 very strong days, right? And, you know, whether you want to say it is the government that's doing it or Wall Street that's doing it, I don't think earnings and the likes are bolstering it up because we're seeing some massive drops. And after getting great earnings on stocks, we're seeing the markets with still big drops those days. Specific news driven. We're going to go to war over Greenland. We're going to tariff the hell out of it. And you know, Europe is going to have to be tariffed because of it. And then there's going to be war and fighting. And, you know, all of these news stories that come out that may or may not be accurate. Okay. But right now, we need to break the highs. By how much? We just need to get above. I don't care because everything becomes a reset at that point. Okay. Woo! We did it. We are in a bearish progression right now. We have a high and a low, a lower high, a lower low. This has to be a higher high or else my next progression is a lower low, which means we break the 67.65, which is the super fib, which is, woo, you do not want to break that sucker. All right. That is a floor of great magnitude, massive strength there. We do not want to break that level. If we do, just look at, you're going to watch every next lower low as potentials of taking them out. Right? And that could literally bring us to that, you know, 10% correction, 20% bear market. Yeah, doing great, Andres. Thank you for asking. All right, so where do I see us now? We've got to get above the all-time high. I think that 7,007 is really the next target. The all-time high came in on this day, which was 7,002 and 28 cents. That was on Jan 28th. And then we're looking at the 69.56, which is part of our ABC pattern if we hold where we are right now. I mean, that's really what it comes down to, is holding at that level. All right. And then, guys, Traders Market Intelligence Report is one, if you're on our email database, it is one that we send out every week that I do an update on the S&P 500. And that's actually our number one most opened email that we send out is that one every week. So if you're not looking at that, you should. There's a short video in there, 5 minutes, 10 minutes, whatever it is, on what's going on in the market and the likes, VIX, S&P. That's all I really focus on. Some maybe I'll mention a couple of earnings if something's happening, but economic reports, but that's it. It's kind of setting you up for next week of what we should be looking for. Okay, good. Jim said traders and market intelligence report was very good this weekend. Excellent. I made an adjustment to how I did it, which I'm going to keep in there. So I'm glad you liked it. We're actually making that type of adjustment to all of our videos. Some of the changes I made in there. So perfecto. I appreciate the feedback on that. So watch those two levels, folks. I mean, we got nothing above here if we do break out, but we got plenty of fib levels to tell us where we go to next. Oh, I love that part. All right, let's look at VIX fear while we're here. Fear's down. We're back in low 1711. I'd like a little bit lower, but from where we were 2 days ago, yeah, we're good. Being at 22 and now we're at 17, we're good. Give me 15, 16, somewhere around there. 14 was awesome. But overall, very pleased with where we're at on VIX. Right. Upcoming trainings, folks. We've got Inner Circle tonight is our check-in. The 19th is when Brandon will be teaching the next class to our Inner Circle group. It's 2 hours on the 19th. Mastermind is tomorrow on the 10th. Trading You is the 11th. Monster Market Movers is next week. Then we've got Power Hour and Trading Coaches Playbook. Now, market is closed on the 16th, so class has been moved to the 17th for that. Otherwise, everything is on regular schedule for Power Hour, for Pop, Cover Call, E-mini, all on regular schedule. Again, next week, Mondays will be the difference, right? Everything will change there. And then the X-Ray, Trader's X-Ray, make sure you check that out, guys. We've got 4 different dates, 18, 19, 24, and 26. Andrew just dropped a link in there, so go ahead and click on that. You can register. It is free. All right, weekly training topic is how far down will the S&P go? So we pick this topic on Wednesdays with the market based on what had happened. If we look, Wednesday was the 4th, so right in here. We got one more day down, which was an exhaustion gap before we got our bounce to the upside. But the question you got to beg to answer the question of where does it go? If it does break out, how far down does it drop? Okay, and that's the concern. If we don't break the highs here, the previous highs, how far do we go? I think we easily get back to the 67.80 as a test. And could this become a wedge type pattern in there where we've got our tops coming like this, and let's say that our lows start coming down in here like this? Could this pattern be setting up or set up in there? Then the answer is yes. We're not seeing any signs of it yet, but the answer is yes. You've got to be cognizant of that it could be out there. So we're going to look for the breakouts, and we're going to manage it like any other wedge and breakout levels and all of that. Okay. How far, from where the pattern started to where the convex is, the 2 points meet. We're going to measure that. We're going to look for a breakout distance in here somewhere, and see what our numbers look like. Okay. But for right now, guys, we've got to look at the 69.56. That's a short term, right? 69.03, much stronger. That was our catalyst breakthrough Friday, and catalyst off of today for the entry for the SPY, and of course the strength in the S&P 500. We break that. 69.03 is our next downside. 68.13 / 68.10. There's a blue zone in there. And then that 67.80 and then 67.65 is the next downside as a super fib. And we've got to be focused on that level, folks. We absolutely have to be focused on it, right? So if we do break, that 67.65 is the very first thing that we're looking at as our break. Now, if we turn this into a yearly chart, oh yeah, that did not work well. That did not work well at all. I got too many fibs on there. But if you go back and look at what the last year looks like, so if we go back and look at February of last year, okay, so right in here, even into March, you could see the move from March to February, right? If you just took that level right there and said, okay, what's the 52-week move, right? I'm just going to drag it out. Let's do it this way. Okay. We just took the 52-week move. Ish. I'm not going to be exact. I'll be close enough. All right. So we're talking about 4,800 to 7,000. Calculator, where'd you go? Oh, there it is. One of the negatives of having six monitors, right? No, not 70. 7,000 minus 4,800. You got 2,200. So we had a 2,200 point move. So we could see a 440 point drop from the highs of where we are, right? Based on this. So just call it 400 points. It's just easier math. Okay. So if we look at the drop, close enough. All right. Somewhere down here, about 6,600 is where we could see us go to. So if we break that previous swing low and that 67, 65 doesn't hold, we're looking at a potential 20% drop down to the 399, that 400 level, which again puts us at about 6,600 roughly. Um, Tripp said bad jobs report could bring us back down and some earnings are jittery. Yeah, there's so many little things out there that could trigger this. So many little things out there that can trigger this. I mean, what's going to happen? Goodness gracious, I can't even imagine. What's going to happen if Billie Eilish loses her property in court to the Indian tribe that she said that they stole it from? Could you imagine if tribes all over the country started claiming that the property was stolen from them based on that one court case, and now they start coming after your property? It ain't gonna be fun. Is it gonna happen? I don't believe so. But my point is, if that does happen, could that be a trigger to cause it? Yeah, you bet it could. Right now, it's not people in New York saying, "Hell, I'm getting out of New York with the new mayor we got here in the city. And I don't want to live here anymore. I'm gonna go move somewhere else." Where? If this is happening all over the country, where? And again, I don't know if it is or isn't. I'm using it as an example only, as it could be a market trigger. Every bit of it could be a market trigger. All right. So when we look at where we're going, guys, there's a potential of 400 points to the downside on the market. All right. All right. Your stocks in review. Um, did you see what Trump wants to allow for depreciation on homes for everyone, not just investors? You talking about Trip? Oh, you're talking about for your primary home too? Yeah. So that's good since the New York City mayor is now saying that what he wants is if you decide you want to sell your home, you've got to first offer it to the city. New York City has up to 6 months to make a decision whether or not they want to buy it, and they're going to tell you what they think it's worth. So if you got to move for a job from New York to Seattle and you need to sell your home so you can buy another one, too bad. You can't sell it until New York says it's okay. There is no quick sale or none of that stuff works. Yeah, I'll take 30 grand less because no, we're going to give you 100 grand less because that's what we want to pay. Eminent domain, baby, is going to be a whole hell of a lot of fun in New York. That's for sure. That's the type of ruling we're talking about. They're also talking about wealth tax on capital gains on your properties. So you bought it at 100, it's worth a million. You're going to pay tax on the 900. Next year, it's worth a million one. You're going to pay tax on that 100. Again, will Hochul allow it to happen? The governor, I don't know, but I think the most interesting one is they want to tax businesses that close their business. California has talked about this. They want to fine them and tax them for that. Uh, yeah, right, Trip. All right, so let's go take a look at some candidates. ONDS. Who is that? Ondas Holding. So I'll be happy to give some analysis on it, Kevin. I don't trade $9 stocks, so I don't have an opinion on the company. But what I look at is I would draw the fib, which would be right in here. We came down to the 618. We were down here. We gapped up, retested, and bounced. We've broken out. I'm looking at that 1012 as support and 1133 as resistance. SoFi. Woo! And the rain came down, down, down. Oh, goodness gracious. It's too big of a. I can't draw a fib from down here all the way up here. It's too big, way too big. Um, Horizontal support and resistance levels is what I would be looking for here. You got a little bit in here, but it's not great. But this 1710 is my next one down. I mean, I might be able to draw from within here, I guess. Yeah, that's probably where we'd go. That's probably where we go. So $20.38 and $19 are the downsides. Upside is 22.19. I hope that helps. Brenda's asking for GLD. It is my fault. Ask my wife. It is my fault that she did not sell the gold when we hit 5,500 on gold. The funny thing was, I talked to somebody, to a gold dealer, who said, Rob, no dealer was paying the 5,500 when it hit. They knew it was false. No one was buying. If that was the case, they weren't buying it. This is not buying it. They'll sell it at 5,500. They said, but we weren't buying because they didn't believe it. And then the next day, we have this massive move down, right? So there was no way. I don't think we're done going up. I think we get back up above the 500 again, but on gold, the 5,000, but on GOD. So it looks like 452 is the downside and 473 is the upside, Brenda. We've got this gap to contend with in there, as well as this one here. So just get me back up to that 475 or so, and I'd be tickled pink, right? And then from there, you're looking at 482 is the next upside. Nugget, another gold stock. Um, it's a minor stock. So let's see. Same scenario. If we close right here, Brenda, retest the 242, bounce 259 is my resistance. If we drop, I'd probably use the moving averages as my stop. And then BTC. Yeah, ugly. Ugly. Yeah, we got nothing down there, but we got to go. Yeah, it's never been there. It's at its lowest lows. So I'm assuming BTC. I don't trade it. I'm assuming it's Bitcoin, some kind of tracker for Bitcoin or something. Doesn't show in a sector. So, yes. Okay. Yeah. I got nothing for you on that one, Brendan. I'm sorry about that. So Jim put in some retracement numbers for the S&P folks. So let me see if it lets me do this. Yeah, it won't let me copy it, Jim. Sorry. Gilead, Michael's asking for. Woo! They've rocked, huh? See, problem we run into. Problem we run into with these types of moves is this a Roman candle. It just goes straight up and tends to fall straight down. I'm not saying it's gonna fail, but here's my biggest issue right now. If we look at an ABC pattern, we go from A where the fib started, B where the fib ended, C the deepest draw before we bounced. Our 100 point stacking level was right here. We're at a phase right now on Gilead, Michael, that we need a new. Sorry about that. That we need a new fib, and we're not there. We just don't have a pullback yet to draw, but that's what we need right now. We've violated on a close the -1 already. The -618 says it's time to look for a place to redraw. We just don't have one at this point. So if we look back in history, I got nothing back there, nothing at all. So at least up to 2019. So I'd be cautious on it. I am not a breakout type person, or this has been running now for 22 days. Let me jump in it now. It's for me. I missed the gravy train on this one. Um, so sorry about that on Gilead, but nothing I really have for you yet, Michael. We need a pullback first and redraw the fib, and then we can get some analysis of where it goes next. Yeah, Greg said Nassau is killing me, but I'm so happy to be out of Queens. I understand. I get it. My neighborhood where we are, there's a lot of people from Ozone Park and Howard Beach moving out here. Um, yeah, I don't remember seeing him trip. He's not here. Cisco, going into earnings. Yeah, so same scenario. I mean, we got an overall, strong pattern on Cisco, right? Really strong. Not since we've seen in the 80s. Strong, and then not 80s, in the 2000s. So strong pattern there. So, but we are within our fibs. So we're good. So we've got the 85 there. So pull back to the 85 and bounce, and 88 is our resistance. So look what happened today. We got enough time. Well, we're over a little bit. That's okay. Sorry, guys. Just someone knew I was going to be done at 12 to 1, so they're starting to message me already, which is what all of that is. So you're just going to have to contend with that since we're past the 1, or I could just mute my phone. Hopefully that does it. Let's just stop them from messaging me. Okay. So what happened? We broke out. We closed right at the fib. We ran up. We pulled back. We bounced. Entry time right there. That was it. That was the Cisco entry, was the bounce right off there. So you're in that trade at about 85 and a half, 85 and three quarter. Right now we're sitting at 86 and three quarter. You're up a dollar on the move there. Tom, is B the ticker? Let's go back to a daily. Whoa. Barrick. Oh yeah, Barrick Gold. Okay. Barrick Mining. Um, yeah, so we had this move up sideways in here. We're gonna come, I'm gonna come off this bottom here. I'm gonna come off of that high because that was enough for pullback because we made it to the 236. So that's all we needed there. All right. So we're sitting just at that zero. You got to check if we need Fibbits. I don't have a number here, so I don't know what the Wilders is. So you may have to split that in half. You may need a line at 48, 48 and a quarter. But if we could break out, retest, and bounce, I'd look at that 50 as my next resistance. Unless you need a Fibbit, then it would be 48. I'm Marek. AG. Who is this? First Majestic. Oh, silver. Got it. Yep. So we've got places to draw on silver now with the pullback was wonderful as far as a place to draw fibs. So break out of the 236, retest bounce. Probably there's a good chance you need to split this in half. It's a good chance we need to split that in half. So it puts us about 25 and jingle, 26. Somewhere around there. Whatever that line is in the middle, 25 and a half, 26. I like it. If you do break to the downside, I'd be looking at that 21.34 as the next downside target. Wally World, Michael's asking for. WMT, Walmart. All right. So we had a fib channel on this, which worked amazing for months. Look at that. That was a monster market movers candidate. We'll draw a fib in here. I just don't think it's going to give us enough movement. It's not. So we're going to draw to this. I don't like it, but it's our only choice. Still doesn't give us enough. It's not there. Michael, so I'm looking at a minimum of $3 between my 618 and my 50. Now, does that mean you can't take a trade here? No, it doesn't. But if you take a trade bouncing off 108 and you get in at 108 and a half, and you're going to get out at 110, right? You got a $2 move in there. But if it wiggles a little bit, starts going, you don't have a lot of room to run on those. So it's a little too tight for my liking. Now, with that being said, if you like it and you break the 130, I'd be looking at 135 as resistance. Again, where is it? Let me see what the fib is. 560. No, we're good. Yeah, so 135 would be my target on that one, Michael. So I hope that helps. IWM, Andres, sure. As in Mary. Sorry, Andres, today was the day. You got the gap up. Did we get a trade? I don't know. Let's look at a 5. And again, I apologize for the going over a little bit. I don't know why this line did not transfer. 260 and a half. Not sure why it. Oh, that's why. No, wait, what? No, what happened? Did I put the wrong symbol? I think it just didn't react quick enough. It didn't pull the symbol. Oh, we were still looking at yesterday's data. That's why. This takes a second to update. Yeah, so yesterday, Friday was the day, right? So that pullback to 260 or the breakout of 269 is what we're looking at for IWM. All right. So I hope that helps, Andres. Um, 246. Yeah, I mean, we did close above, Andres. So you went from 246. I maybe, but which one is bigger, Andre? So if you switch the fib from where I have it now, is this bigger or is this bigger? It's not a right or wrong. It just is. This is $29. This is $26. So I'd be working off of this one still, Andres, back here. All right. Um, Perfect. Oh, Gilead has earnings tomorrow. Thank you for that trip. Masood said, I am here. I am new here. Is there a way to see your option call results? What do you mean to see them? I mean, outside of what I just showed you guys? I mean, that was it right there. And if I'm mispronouncing it, I apologize. Masood, that's the results right there. This was CrowdStrike. This was Tesla. This was Amazon. You can see what the rate of return was on one contract. Um, let's see. All right. I think I got them all. I think I got all of the questions. Did I get AG? Did I skip that? I think we did AG. Yeah, we did. We did. So I think so. All right. There we have it, ladies and gentlemen. Sorry for keeping a little bit longer, but I thought it was well worth it. It was a good early session. I didn't want to cut that out, so I thought it was too important with the questions you're all asking. So, with that, everybody, have a great rest of your day. Make it a profitable one. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. Everybody, have a great rest of your day. See you at our next update. There's some links in the chat. Grab them. I'm going to leave the room open a few minutes. Andrew will be here. Have a good one. Talk to you soon, folks. Bye.